Hello, and welcome to Rocket Fuel, the daily update of everything that's happening in the Rocket Pool and Ethereum communities and ecosystems. My name is Wack. Today is May 8th, and today we've got a packed episode. We're going to be talking about Smart Node Stack version 2 beta 2. We're also going to be talking about a huge development with the rewards tree saga that's been happening on the Rocket Pool sides. On the Ethereum side, we're going to be talking about a new EIP dealing with account abstraction. And also we're going to be talking about some strange going-ons in the ETF land. So let's get started.
10, 9, ignition sequence start, 6.
So we're going to get started here with this news from Joe. And Joe says, hello node operators, today we're releasing beta version 2 of the Smart Node version 2. This one has lots of fixes and some new features based on feedback from our awesome beta testers. Here are some of the more prominent non-cosmetic changes. So it's fixed voting on protocol DAO proposals, fixed pDAO rewards percentage now use the correct service route, fixed the node rewards command, fixed the pDAO proposal list command, multi-select commands such as minipool distribute now support ranges as well as comma separated options. Things like 1 to 3, 4, 5, 6 to 10 will now work. Embrace your inner printer page dialog. The Node API no longer uses Unix socks. It's been moved to a network socket bound to localhost default port 8080 as part of the Mac OS support. And then minipool exit now properly respects your minipool choice. Added the archive mode setting for Geth. And then there's some known issues. Version 2 is currently not working on Mac OS because of some fundamental differences between it and Linux. And Reth doesn't work on ARM64 machines that were built with particular kernels. And then that's not really a version 2 thing, that's a Geth thing. Sorry, not Geth, Reth thing. So take a look at GitHub release for the full list of changes. And do not use this on mainnet. This is just for Haleshki. It won't actually work on mainnet because it needs the Houston contract upgrades. And of course, those are not going live just yet. So thank you, Joe, for the update about Smart Node version 2 beta 2. Yeah, that's a mouthful, but it looks like development's coming along really nicely, and hopefully that will be ready for mainnet with Houston. Now, a few days ago, we talked about there potentially being issues with the Houston upgrade, especially related to RPIP 31 and rewards tree version 10. Well, we finally got some great feedback from Langers and team members about this. So Langer says, we acknowledge the discrepancies documented, and this is the Houston specification discrepancies, and we'll be revising our QA going forward. So we identified these issues in our internal testing. Obviously, we would prefer to rectify the issues, but we have been conscious of delivering Houston ASAP. Rectifying RPIP 31 is a very small change that could be developed, tested, and audited quickly. Depending on auditor availability, it may even be comparable to a pDAO vote timeline. As we would have had to delay for the pDAO vote anyway, we might as well fix the issue. It would also not affect Saturn in the least. We will confirm scope and auditor availability ASAP. For completeness, we could also rectify the small guard issue with RPIP 33, but to be honest, as coded, they make more sense than the spec, though rectifying the spend interval amount will not be possible while keeping the scope small and quick. So yeah, what they're doing is, it looks like they're going to go for option 4, which is to fix the bug, fix the issue that's come up in the contracts. And the good thing is that it's not going to take long, which is what the worry was. But the bad news is that it might delay Houston again. Now, Sam has started asking questions and others started asking questions. So here, Sam says it sounds like the suggestion is basically option 4. It's not that large of a delay. This would mean rewards tree spec 10 wouldn't be used right. I'm curious where that leaves the 0-1 question as well. And the 0-1 question, of course, is the claiming of multiple rewards from multiple nodes with one transaction. Patches says this would probably just untangle the question of whether they should do version 10 or 1 from the desire to use version 10 to alleviate the unimplemented portions of RPIP 31 and the griefing vector. I'll do a more thorough read of the proposed contract changes in the morning though. So this got a discussion going. Here, Long for Wisdom says I updated the tracking post for the W and F in code stuff intervals. What's the plan to fix the discrepancy pDAO vote. Langer says you beat me to it. For the recurring payments, very early in design, we realized that setting a percentage of inflation was both complex and timing. To be honest, it was so early that I thought RPIP was written like that. Essentially, it is complex because the contract has to track inflation and record shares for the recurring payments. This is doable, but complex with potentially some edge cases. It's also limiting because though the cases we have at the moment all follow the same inflation-based pattern, others may not. Locking into an inflation-based model limits what we can do with it. My preference would be that we acknowledge the discrepancy and inform the pDAO of the reasons. I don't see there being a pushback, but if there is valid concern, then we can evaluate. Happy to put that on the forum as well, but just wanted to answer the question. So let's actually then, the discussion for the main RPIP 31 stuff went to trading. Sama says, seems like the recommendations that fixing contracts and auditing may be just as fast as a pDAO vote and implementing workaround. Not sure. Halulu says, yes, but making seemingly simple changes quickly is the reason protocols get wrecked. Not sure how I feel about it. Vaka assures Halu by saying, at least, the changes will get audited. Lee says, does this mean Houston won't be the end of May? Snow replies by Houston, more like Winston. Langer says this is heavily dependent. Right, so the fixing, he says it'll be heavily dependent on auditor availability, but the change is very small and our auditors have been extremely flexible in the past. So that, of course, is a good sign. And then Sama says, if Houston contracts were fixed, would that mean rewards tree? And then that was the same question about how the rewards tree would work out. Lilo gets reassured by Langer saying, we're still following the development and audit process. We are just not throwing it into mainnet, which is why most projects get wrecked. The design spec was discussed extensively during RPIP authoring and DAO review, so I see minimal risk there. We're just aligning the code with the spec. As Vaka said, we're also going to go through the audit. So that is quite reassuring, of course. And then there was a question about voting as well. So Halulu says, for the voting, that was just a question for clarification. Never mind, let me rephrase. I was just nervous about the short time frame for the contract changes, even if they are small. And then Noshua was assuring Halulu as well, saying, that this is like it's routine to find things in audits, address them at the end with a modest timeline. And then Noshua says that if you look up the repo, there've been numerous bug fixes from the audits relatively close to launch with Atlas and Redstone as well. And then Langer says, your concerns are valid, one that we're very aware of. We don't make these changes lightly. We risk review each one. So thankfully that all looks good. And then we actually got a nice post from Joe here from this morning saying, he says, Langer's posted the thing, now I can share my thoughts. So he says, here goes nothing. After all the discussion around RPIP 53, launching Vanilla Houston isn't really a viable option. In deciding what to do next, we have the 4 options from Val. So disable the RPL withdrawal address in the contracts, work towards version 10 with RPL address as a documented feature, work towards version 10 with RPL withdrawal address for everyone, and implement RPIP 31 as written with the delay stuff. So he says, do we do a sentiment polls on whether the options are correct ones? That might be 1 week. We do a formal snapshot vote, that might be 2 weeks. We do whatever gets voted on. Best case 0 weeks, worst case a lot longer. The contracts go up on mainnet and the ODAO vote to apply them starts. The ODAO waits 7 days and then upgrades mainnet to Houston. He says in that scenario, the best case we're looking at is launching Houston early June anyway. Given that timeline, what Langers is stating here is that there's another potential option. The guys implement RPIP 31 fixes and ask the auditors if they can do an expedited review. If they can, it's possible that we can do a complete round trip of fixing the contracts, auditing the fixes, tossing the fixes up on Haleshki to ensure correctness. In all about the same time as it would take to do the original vote on RPIP 53. In other words, launching Houston in early June still. He says, I don't think there's any contention that implementing RPIP 31 as written would be the optimal outcome. It just has string attached where we're assuming it would come with significant delay. So what Langers is doing is assessing whether or not that's actually true. I believe he's already reached out to auditors to get that information. So where do we stand? Basically, it comes down to 2 scenarios. A, the auditors confirm within the next few days that they can do a rapid turnaround and we can enact option 4 in a matter of weeks instead of months. The vote in this case would probably be moot since it's all about a workaround for broken contracts which would be fixed as part of this. In this scenario, I would simply rescind RPIP 53, request it to be withdrawn, and given the new developments. But wait, what about the 0-1 thing? So in this scenario, I would ask the node set to write up their own proposal, maybe RPIP 54 or something, which would also propose a new version 10 of the reward tree spec to introduce consolidation. It may or may not be the same as what I'm proposing in 53, given what we've learned, the intent of the proposal, its impacts, and who it benefits would be made very clear. The protocol DAO could vote on it with complete knowledge of what they're voting on. And then scenario B, the auditors cannot confirm a rapid turnaround, or they confirm such a thing is not possible, in which case we're back to where we are today, with hopefully a little bit better informed about the timeline for option 4. We put up a sentiment poll to gauge whether or not the 4 options listed above are good to go, and if so, we do a snapshot vote to decide how to proceed. But wait, what about the 0-1 thing? As part of the sentiment poll, I consolidate all of the feedback around RPIP 53 to again make very clear what the options are, what the ramifications will be, who will benefit, and everything else that needs to be expressed. I'll post iterations of my draft verbiage in here for review until everyone's happy with it. When it does go to snapshot, I do the same. Again, the aim is to dispel any possibility of hidden agendas or unclear side effects, so the protocol DAO can make a properly informed decision. Basically, Langers is requesting a few days to get information on option 4, so we know which of these scenarios we live in. Now, once we do, we can go from there. Fun side note time. Yeah, well, then you can go read the side notes if you want. But I think one of the things that was really nice here is Ramana replied by saying, "I'm so proud of the team today." And Joe said, "Whatever happens, I really hope this whole episode can be used as a lesson learned for next time," which is great. So it seems like the people who had the most active criticisms, they have been placated by the comments of the last 12 hours or so, and it seems like Houston will be delayed again, but hopefully not by much, hopefully potentially just a couple of weeks. But as soon as we get any information about that, I will let you all know where we stand. Okay, next we have an update from the GMC. So here we have the latest grant round that has ended. So this ended on May 7th, which was yesterday. And then we've got a new grant round that has started, and that will end on June 7th. So you can keep that in mind. And that's grant round 13 that started. That will end on June 7th. So grants round 12, of course, which has just ended. We got a lot of applications this time, which is really cool to see. We got one from the Flat Money guys, Brave New DeFi. And we also got other applications here from Beacon Chain Advertising Renewal with the metrics about what they've done and not done. So on the grant side, we were quite light, actually just 2 grants with retrospective awards. Here we got Open UX for asking for more money, and that's actually going to be quite controversial. Here we had some work with MIG for retrospective work for support work, and from Lee, and also from Steely, and also from Halululo. And then we had this Amsterdam meetup reimbursement of cost, which is from Elfinbob, and that's it. And then in terms of bounties, we had a couple that were quite interesting, and this one was from Epinef, and this was provide support for questions posed by Rocket Pool community members in the support Discord channel, and basically putting up a better framework and better ideas of payments for the work being done. And then Patches had a couple about the Smart Node version 2 and wireframes building GUIs, and also another one here for open API spec for that as well, which is really cool. And then we had a bunch of community feedback. So there was a bit of discussion that went into the Open UX application, and discussions about that. And then we also had people giving their feedback about the different awards and whether they should be paid out or not. And here Pateris was saying, what he thinks should be paid and shouldn't be paid. We had Valdorf as well, giving ideas on whether what should be paid and shouldn't be paid as well. And giving their feedback on that as well. And then Ishka was providing some clarification of the flat money stuff with Base and the IMC's perspective on that. So that was all pretty cool. If you want to figure out what's going on with the grant stuff, follow those links and you can see what's happening. Okay, next we had this update from Sneaky Ninja Guy, who let us know that the snapshot for the final grants period has probably taken place now. Actually, let me see if I can find this. Where would I get that? Events. Let's see if the snapshot's been taken. I think it should have been taken potentially, or somewhere around now. But anyway, by the time you watch this episode, the final snapshot for today's rewards period will have been taken. So you can go and top up your RPL if you need to. I think this month we were actually flat compared to last month. So it might be the case that if you were good last month, you might be good this month as well. But yeah, I can't find this final snapshot, so I guess it should be taking place soon. But Sneaky was kind enough to let us know that you'll have about 15 hours in order to get everything topped up before the actual snapshot happens. So I always have to be clear about this. So what happened now, about 15 hours before the reward period ends, is the ratio will be locked in at where your 10% collateral is. Then 15 hours after that is when the actual rewards period ends, and that's when the Merkle trees or whatever it is will figure out how much RPL you have on your node and whether it's more than 10% in order to calculate your rewards. So definitely keep an eye on that. And if you are around that 10% mark, it'll be worth you topping up. Okay, we had an update from Vaka here with the latest treasury report. So Vaka says, hello Rocket Pool. If you need an intro on how the pDAO treasury report works, check this post. So he says this period, the pDAO received 6,126 RPL from inflation. Its balance now is 53,936 RPL. The IMC and GMC were paid 10,384 RPL and 4,257 RPL respectively. So the GMC and the IMC have gotten their money, and also the pDAO's balance is actually a nice 54,000 pretty much, which is really cool. If you want to go and have a look at the numbers, then you can check the treasury reports that are linked in this post by Vaka. Okay, next we have an update on Heroglyphs and how that's going to work for Rocket Pool potentially. Well, we had this post from the Heroglyphs team. Let me actually just make it a bit bigger. And one of the questions here was, can I participate in the Heroglyphs game with Rocket Pool or as an eigenpod? And they said that basically your withdrawal credential will be directed to a smart contract. And the problem with it being directed to a smart contract is you can't access like the badge tokens. So there's going to be some problems for you there. And they said Heroglyphs are actively in touch with the projects mentioned and looking to resolve the issues preventing full participation. So they're trying to make it so people can do this, but at the moment it's not ideal. So this discussion was taking place in the airdrops channel, which is where most of the discussion has been taking place. And we got some, the questions and answers, and people are trying to figure out about, getting the badge tokens, but also you need to get the NFT key and like mint your ID and stuff. So we're still trying to figure things out, but it looks like at the moment it's a good start. So here it's a good start for us. If things go well, we can also mine badges individually eventually. So what's happening is you can potentially get the rewards for attestations, but for the badges you might not be able to yet. So definitely pop into the airdrop channel and you can ask your questions better than I'm explaining them right now. Okay. So moving on to some staking news now. Here we have an update from Peter Silady, and Peter is of course with the Geth team, and here he is giving him like a huge shout out to the latest version of Geth. He's saying Geth 1.14.1 seems to be about 5 to 7% faster than Geth 1.14 at block processing, and Geth 1.14.2 seems to be another 5 to 7% faster than Geth 1.14.1 at block processing, squeezing every last drop of Ethereum. So they're doing like A/B testing internally to see how it's all working, and then they sync their benchmarks and get the numbers. But this is actually really great that Geth is developing so well. And for the longest time, a whole lot of people were telling you to get off Geth, and people are still telling you to get off Geth, but that was never because Geth was a bad client. It was always because of their supermajority. And right now they are not a supermajority client. So, if you are an individual home staker, then unlike, you're a small node operator, I'm not going to tell you to go use Geth because it's still at a risk of supermajority, but Geth does have some really cool features that I think people like. And like Peter here says, they are squeezing every last drop of performance out of Geth and Ethereum that they can. So that is really cool. Congrats to them. Okay, next we have some news out of Ethereum, and the big story of the last day was account abstraction and its inclusion in the next Ethereum hard fork, Pectra. Now, a few weeks ago, we had the core devs saying that they would like to include EIP 3074. Apparently, there was some controversy around this and the way that some of the transactions were handled. So Vitalik here wrote a post with a new EIP mentioned and some information. So here there's let's actually just jump to some Twitter threads explaining what's going on. So here we had Hayden Adams of Uniswap saying EIP 7702, a new alternative to 3074 from Vitalik to add quantum resistance and better compatibility with 4337. Penguin here says, can someone explain to me like I'm 10? So Hayden says that 3074 upgrades for normal EOA wallets to give some smart wallet functionality. 4337 is standard for smart contract wallets. And then 3074 was slated for inclusion, very likely worried the long-term implications of one, compatibility between 3074 and 4337 wallets, and 3074 breaking in the future world of more powerful quantum computers. So Vitalik created this IAP hoping to solve both concerns. There's better ways to abstract gas, batch transactions, aka making multi-step flow like approve and swap one click, and other cool things without requiring migrating to smart contract wallet, which is really cool. And then Emmanuel Awasika says, I said Ethereum's governance is scrappy and chaotic and fun, but it works. I've seen more debriefing and fighting. Did some myself over 3074 versus 4337, but we're finally getting somewhere. Even Thorgard likes 7702. So rough consensus works, people. And then here there's a post by Greg the Greek, kind of explaining what's going on as well, and discussing 7702. So if you are interested in following along with that discussion, check out the links and the replies to the tweets that I've posted. And of course, you can read Vitalik's post as well. Okay, next we've got some really interesting news coming out of Grayscale, and nobody really knows how to think of it. So James Safat here says, update, this is interesting. Grayscale just withdrew their 19B4 filing for an Ethereum Futures ETF. This was essentially a Trojan horse filing in my view, in order to create the same circumstances that allowed Grayscale to win the GBTC lawsuit. Approve futures, deny spot. So what he says here, he goes on to say, I don't know why they do this, honestly. In my mind, might as well make the SEC write up an approval or denial for an ETH Futures ETF and go from there. Maybe the SEC spoke with Grayscale about this, and whatever was said convinced Grayscale to withdraw. This is a complete guess. And then there was Eric Balkunas as well saying, sounds like this is a good sign. They're not going to pursue a lawsuit this time around, because that's long did my theory. I'm not sure what he means by that. But anyway, what's happening is there was an ETF that Grayscale were filing. So Bitcoin had its futures ETFs, and it was a certain kind under, I think, Act of 33 or something. There was like some technical way that it was written up and processed. Then the Ethereum spot ETF was approved, but that was using a different foundation. So it wasn't under the exact same framework. Now, what Grayscale here were doing was starting a new Ethereum Futures ETF, but with the exact same framework as the BTC one, that then the court said, you have to, if you approve this, then you have to approve a spot ETF. Now, the idea was, like James here says, that this was a Trojan horse by approving this, then denying a spot. Then the court case would be exactly the same as last time. Though none of these like small differences would be present, but people can't quite figure out what's going on. Nate here says, highly interesting, questionable move by Grayscale. In my opinion, they would have had grounds to file a lawsuit just based on this futures-based ETF being denied, because case is simply this: SEC is treating BTC and ETH futures differently by allowing 33 act for one and not the other. So that was Nate Grassi's take here. He says, more importantly, getting an SEC ruling on this filing could have been a linchpin in any lawsuit brought. Sorry about that. Linchpin in any lawsuit brought regarding spot Ether ETF denial. I'm not sure how to read this. Only reason I would do this if I was Grayscale is because I have assurances spot ETF would be approved at some point, and I don't think the SEC is in the business of offering assurances around anything crypto related. Baffling. So here there was some interesting comments and replies, and Zatoichi says, the obvious reason probability of the ETH ETF being approved is so low that it's not worth the time to proceed in this direction any longer. Listen to the Bankless Consensus interview. They spell out plainly there's no hope for an ETH ETF now. So I think what the point is here is being made is that they're going to, the SEC is like not going to be happy, like they're not going to let this happen. And the lawsuit basically, it looks like they're saying to Grayscale that like it's not going to work. I don't know. I don't necessarily agree with that. Like it's all about like jumping through the legal hoops, and I'm not sure why they've stopped jumping through the hoops at this point. Hopefully, we'll get some clarity from Grayscale in the coming days. But yeah, I'm not sure exactly what to make of this, and it seems like neither are the analysts. Okay, next we had Gary Gensler on Squawk Box, which is NBC's morning markets talk. And he was on there for like one of the segments, which was about 6 or 7 minutes. And Gary Gensler says that crypto is an outsized piece of the scams, fraud, and problems in the overall markets. There was some, you can watch the video, it's 6.5 minutes long. There were a couple of people talking about it. DC Investor here says, Gary acts like crypto is non-compliant with security laws, yet simultaneously doesn't provide a legitimate path to be compliant with securities, and even for projects which say they want to comply, then rules things are a commodity when intermediary cronies get to make money on the futures ETFs and leverage futures ETFs, but suddenly turns ambiguous when it comes to approving spot ETFs, which they would profit less from or would create a real underlying demand for our asset. Then acts like he isn't the one focused on crypto, but rather the media, the greatest regulatory scammer of our times. And here we had some more feedback as well. So William says, Gary Gensler talks Squawk Box. He would rather not talk about crypto, saying it's a small part of the overall capital markets and doesn't deserve the attention it's getting. Gensler asks, where are the financial reports for these crypto tokens? He doesn't understand crypto clearly, and he's going after the wrong bad guys. He continues being a villain of crypto, not the right cop. And of course, Gary Gensler, a DC Investor is right. Like they're accepting futures ETFs for Ethereum, but at the same time, it looks like they're going to deny the spot ETF, and it just doesn't make sense. And it seems like they're making up things as they go along. But Gary is now getting to the point where he says he doesn't want to talk about crypto, and he says he doesn't want to talk about crypto while his agency is sending out Wells notices to crypto company after crypto company. So it's like, what's going on? Like we need answers here, and the answers that Gary is providing are not good enough. And it seems like he's going to be called in front of Congress to explain what's going on. And while he's there, he's probably going to skirt around every issue as much as he can again as well. So it's just scummy people. Sorry. Okay, so this is new, like this idea, right? It's like, why is the US agencies trying to cut access to Ethereum? So JC has a really good post. He says, this is a great question. Let me reframe it another way. So who loses their job if Ethereum is successful? All the intermediaries. The banking business is all about maintaining the ledger for everyone. Ethereum is literally a distributed ledger, so it directly competes against them. But a lot of laws come to regulate the custody part of banks, and we also have custodians. Custodians and equity markets are directly threatened because there's a way to take self-custody. It's literally cutting them all away. So here, JC goes on to explain about how there's all these different people who are involved in the process of our markets and our money and everything. And with Ethereum being successful, it would remove the need for all of them. Like and it changes the game completely. It goes on to say their intermediaries are trying to push the US government and lobbying people like Elizabeth Warren to push the same TradFi laws in Ethereum, even if it's totally stupid. The laws existed because these intermediaries exist. If Ethereum removes them totally, so these laws make no sense anymore. Ethereum is the new financial system. So this is, and then there's another point here as well. So Hedgex says there's no compliant path forward for crypto. It's the same as the internet. Anyone can transact peer-to-peer. That's a feature, not a bug. Once smart wallets are live, it's game over for financial intermediaries. One tap zaps into DeFi better than any TradFi UX. And of course, this is without any of the clearing houses, any of that kind of stuff, any intermediaries as well, of course. And then we've got this point from Clouted here. It says, it's so weird, crypto has unironically become the largest dissonance in the entire universe. He's being a bit hyperbolic there, but he says a full-blown financial tech industry with real fundamentals, yet a majority of society thinks it's still a scam over a decade later and won't even consider it. Bitcoin is a $1 trillion asset. Ethereum is bigger than almost every single bank in the world, yet people literally laugh and think anyone who speaks about crypto is stupid. I guess higher Clouted. So what Clouted here is trying to say as well is that right now Ethereum already is a viable financial system. And as it gets bigger, it'll just get stronger. But even without that, it's already big enough that it's working, and people just aren't seeing that. So yeah, it's going to be really interesting to see how we all grow in the next year or so. With this idea of potentially being a bull market going into some kind of peak in 2025. With Ethereum, reaching $1 or $2 billion market cap, it becomes that much of a bigger economy, and then it's going to be interesting to see whether you can put the genie back in the bottle. And there's one very, very interesting thing that not enough people are paying attention to. Here, Varun says there's only one big winner if crypto wins. And if it's not obvious already, here's a chart making the point crystal clear. It's the US dollar. So what's happening here is that the total crypto market cap, like what's there, it's like BTC is around 20 to whatever percent according to this. And then you've got Ethereum, which is about 10% according to this. And then all the other all the other L1s, which is 5-6%, I guess. And then stable coins were around 60% of this. Now, I'm not sure exactly how this is being measured. I think it might be with transactions and like movement of value. But what's really happening here is just showing just how big stable coins have become. And of course, like Circle's USDC and Tether's USDT, they are basically buying treasuries from the US. They're buying US debt, and they're giving, they're keeping the returns for themselves, and they're putting a product out there. But stable coins are actually becoming a significantly large buyer of US debt. And as crypto gets bigger and as stable coin demand grows, more and more of those stable coins will be buying US debt and treasuries. And that just tells you just how important stablecoins are becoming for the US. I think it's really short-sighted the way that the government's kind of thinking about it, and they're definitely not doing enough to understand this, because once they grasp this, I think it will just make sense for them to be like, yeah, let people buy stablecoins because they're getting so much out of it on the other side. Okay, Zero Hedge here shares some information about Ethereum's daily active users. Now, Anthony Sassano has told you many times that there's no good metrics, everything is gameable. I totally agree with him on that. Here, one of these like daily active users metrics is obviously gameable as well. But what's really interesting here is just how much crypto usage has grown since a couple of years ago. So a couple of years ago, we had around 400,000 active daily users. And that number in the Ethereum ecosystem now, using Ethereum and its layer 2s, is up to 1.2 million daily active users. So it's gone up 3x basically. The amount of users on mainnet is about the same, like vacillates kind of between the high 300,000 number, or around 300,000 daily users, all the way up to around 400 and a bit thousand. But it's since Denkun, the amount of users on layer 2s has just skyrocketed, and the biggest growth area here has been Base, and Base is doing more than any other single execution layer here, like including Ethereum layer 1. It's going gangbusters, and the chart is just going to get bigger and bigger, I think, and that number is going to grow a lot more, I think, as we get into like a deeper retail bull market. And then here as well, like you can see contract deployments are now like really high as well. And it peaked about 2 weeks ago on base, but everything is looking really strong. And base has that right now there's 14,700 new contracts launching every day on the Ethereum ecosystem, and 9,000 of those are on base. So it just shows you how much of that attention is capturing. Grow the Pie here have some information as well, saying a new wave of higher activity seems to be beginning, and Arbitrum is leading with 1.7 million weekly active addresses. So here, Grow the Pie is saying Arbitrum, of course, is catching some of that market share as well, and some of that growth as well. So great job, Ethereum Layer 2s. Everything is looking really wonderful right now, and I'm really excited to see that carry on going. Okay, and we're going to finish today's episode with one of my absolute favorite apps, that non-financial apps in crypto, which is POAP. And this is an offshoot of POAP. It's called POAP Global. And here they want to create a POAP adventure. So what they're doing is they're launching an app, POAP Global 2, with no more physical NFC dispensers. We're making geolocation POAP app, which lets you create and collect POAPs hassle-free. And then there's a link that you can go and sign up for the app, and you can earn the early supporter badge for a limited amount of time. So what they're doing is this is going to be like a geo cache type of website where you will go places in the real world, and as you're there, you'll be able to collect a POAP saying that you visited those places. So they said that the community wants an app, and we're going to give them an app, and they listen to feedback about placing the physical, dispensers. So they want to use the app now as well, instead of that. So I said, why not start an app from the start? From personal finances to funding such development, to initially being overly optimistic about the potential physical NFCs, one seeing platforms like Geocache. So what's the vision? Picture Pokemon Go and Strava meets travel. We have a ton of features on the way that will truly define the direction we want to take with this app, all with the important touch of delivering blockchain technology to the masses. And then you can still use your NFC dispensers if you have them. And yeah, if you're interested in this, then definitely sign up for it. Like, I love POAP Global. I think they're doing some really, really cool things, and I'm really happy to say that I'm going to be a part of this. I'm not getting paid or anything like that, just as a community member and as a champion for what they're doing. But yeah, it's really cool stuff. But anyway, on that note, I'm going to end today's episode. So thank you all for watching, listening, and being part of the Rocket Fuel community. I hope you all have a lovely day. Yesterday I didn't record because my cough was quite bad, and my voice was quite shredded. So sorry about that. But I'm back now, and I should be good to go. But I'll see you all tomorrow. Bye.